Hi everyone, welcome again to RHB Assets Management Podcast Series. I'm Fauzi, Chief Investment Officer, Equity Malaysia. Let us start with the review of the FBM KLCI index performance to date. The index is extremely weak since the start of the new year. In fact, it has been trending down since touching the intraday high of 1,695 on 16 December 2020. There are several reasons associated with the weak performance. The first one is the lifting of the ban on short selling. Most of the index heavyweight stocks were under selling pressure, in particular glove manufacturing stocks. The second reason is the steep rise in the new COVID-19 cases in the past months, averaged more than 3,000 per day. This has led to the re-implementation of movement control order by the government, which is likely to delay the recovery in the economy. And number three is the heightened local political noise. FBM-KLCI is the worst performing index in the region so far this year. On the other hand, despite weak stock market performance, Malaysia corporate earnings continue to go up since bottoming out in June 2020 due to the vaccine's deployment optimism, which would help to boost the economy later. The earnings upgrade is strong despite the implementations of CMCO from middle of October 2020. Interestingly, corporate earnings were upgraded by close to 11% year-to-date despite the implementation of MCO from 13 January 2021. In fact, in absolute terms, the earnings are currently higher than the level before it was downgraded in early 2019. In the past, there was strong correlation between index performance and corporate earnings. Index tends to perform well when corporate earnings continue to be upgraded. On the other hand, the index performance became lackluster when corporate earnings started to be downgraded. From the chart, the performance of the FBM KLCI started to decline when corporate earnings were downgraded from March 2014. In many occasions, the corporate earnings will tend to lead the directions of the index. However, it is not happening at the moment as the investors are still worried on the rising number of new COVID-19 cases and the impact on the economy should the MCO continue for a longer period. The index is weak due to the persistent selling pressure from the local institutions. Local institutions are the major net seller of the market year to date, with participation rate at around 45% of the market value. On the other hand, local retails have been the net buyer, with participation rates remains high at 38%, despite blanket loan moratorium ended at the end of September 2020. Whilst foreign institutions are also net seller of the market, the amount is much smaller than the local institutions. Having sold massively in 2020 of around 25 billion ringgit, foreign institutions turned net buyer of the market in the second week of January and first week of February, despite the implementation of the MCO. However, their participation rates remains low at around 17%. In terms of economy, Malaysia experienced four major economic recessions from early 1980. The first one was during 1985 to 1986 period, followed by the second one in 1997 and 1998. The third one was during 2008 and 2009, and the latest one was in last year. Now, let us focus on the index major market cycle. Historically, FBM KLCI peak-to-peak market cycle duration is 124 months to 130 months, and FBM KLCI bottom-to-bottom market cycle duration is 124 months to 135 months. As of January 2021, we are in the 33rd month since the index peaked in April 2018 and in the 10th month since the index bottomed in March 2020. To conclude, we believe that it is the time now to enter the market as we are at the early stage of the recovery in the economy as well as the stock market. We do expect index volatility to increase due to higher retail participation, but with upside bias as the economy is expected to recover from second half of this year. The corporate earnings, which are key to the future index performance, remain resilient despite higher COVID-19 cases and implementation of movement control order. We expect the local and foreign institutions become net buyer to Malaysia equity market once the number of new COVID-19 cases subsides significantly and vaccines deployments are successfully implemented as per the government plan from end of February. However, there are risks that the index may not perform as expected if the COVID-19 cases do not subside significantly and MCO extended. Thank you.